welcome to all of you just starting to flow into the webinar now. We'll just give it about 1 or 2 minutes, wait for everyone to come into the webinar, and then we'll get started. All right, everyone, I think we'll get started and we might have a few more people just flowing in as we go. But I want to make sure we give it plenty of time to learn all about the investing trends of tomorrow. So thank you for everyone who's joined us live today, and we'll also make the recording of this webinar available on our YouTube channel for those that are unable to join. I'm very excited to have Kanish from ETF Securities here with us today to talk all about the investing trends of tomorrow. And Kanish, you're the head of distribution at ETF Securities. Would you mind providing the audience with just a bit of a background as to who ETF Securities are and a bit more around what you actually do at ETF Securities?
Yeah, sure. Rachel, thank you firstly for letting me sort of come on and talk to everyone today. ETF Securities, we are the second oldest ETF provider. So essentially we are the issuer of exchange traded funds. We launched back in 2003, so nearly, coming up to 18 years now. And we have over 17 funds that we offer to investors. We manage close to $4 billion. And the whole sort of premise around what ETF Securities is about is really trying to provide innovative solutions for investors. And, we're talking about the investing in the trends of tomorrow, and we do have a number of exposures that do that. My role is as head of distribution. Essentially, that sort of covers sort of sales, marketing, and really talking to clients around the ETF industry and our ETFs.
Yeah, great. Thank you. And before we get into the content, which I'm very excited to hear, I know you've spoken at a number of events, Kanish, but for some reason, I always seem to miss your session. So very, very excited to hear it today. Now, just for everyone that's watching, a few housekeeping things. Feel free to pop into the chat kind of where you're from, your experience investing with either ETFs or with Superhero or just generally. If you do have any specific questions throughout the presentation, feel free to, instead of using the chat functionality, you should be able to see at the bottom of your screen a Q&A function. So you can use that to ask questions throughout, and I'll be able to ask some of those questions for you to Kanish throughout the presentation. And then we'll also have a few minutes at the end to run through any that we didn't get throughout. So yeah, as we're going through the slides, if you have questions that are specific to what Kanish is talking about at the time, we can run through those at the time. Otherwise, we'll run through some at the end. Okay, I think we may have a few people having issues with just some of the hearing on the webinar. Is everyone able to hear me okay? Great. Yes, we're still on the first slide. We'll get into the other slides in just a moment. All right, great. I think most people can hear. Otherwise, maybe try a different speaker or muting and unmuting again. Great. Thanks, guys. Okay, Kanish, I will hand it over to you to take us through the investing trends of tomorrow.
Thank you, Rachel. So before I get into the presentation, obviously we want to make sure we show our disclaimer. Now, any information provided today is general in nature, and please speak to a financial professional before making any investment decisions. Also, we will be talking around a number of different funds that ETF Securities offers. And what I recommend is going onto our website, etfsecurities.com.au, downloading the product disclosure statements, the fact sheets, etc., but reading through the information there. And if you have any questions on those, you can reach out to us. Now, the agenda for today is we're going to cover very quickly sort of some basics on ETFs, so some ETF Investing Basics, but then we're really going to get into the guts of what today's presentation is all about, which is what are the themes of tomorrow? And then we'll highlight and give you a bit of a sort of a magnifying glass on a few of the different thematic ETFs that ETF Securities offers, and they include our FANG Plus ETF, our ACDC ETF, so battery technology, and our ROBO ETF. But just to highlight again, and as sort of I talked quickly on this in the intro, but ETF Securities, we are the second oldest provider, and we manage close to $4 billion. In terms of though, what is an ETF? Even I was talking to friends and family, and some of them, I have to try to explain what I do in my job, and I have to explain to them what is an ETF. And we sometimes throw a lot of acronyms around in the investment management world and finance in general, and that can scare off a lot of people. And I wanted to try to dispel some myths around the acronyms and also around ETFs. So an ETF stands for, as an acronym, it stands for Exchange Traded Fund. But what I actually want everyone to do is just flip those words in reverse. And all an ETF is the fund that is traded on exchange. So if you've ever invested in a mutual fund or a managed fund, well, then that essentially is what an ETF is. It is a fund that is traded on exchange. It can be bought and sold like a normal stock. It trades like a normal stock, and the benefits of the ETFs are to give you exposure to a myriad of different types of investments.
Great. And I guess in terms of what a fund means, then it's, as opposed to being, I guess, a company that produces traditional goods and services, a fund is a company that's purpose is to invest in a number of different companies.
Yeah, so the best way to think of a fund is the vehicle. It's a vehicle for an investor like everyone that's listening here to access different exposures. Now, whether that exposure is a basket of stocks, whether that exposure is a commodity, a currency, a basket of bonds, that's essentially what a fund is. And an ETF essentially has democratized that access. So it's allowed self-directed individual investors to access what previously were really hard to gain exposure, like physical gold, for example.
Yeah, no, that's great. Thank you. So anyone can buy and sell units of an ETF on the ASX, as opposed to some of the more closed active investment funds that may have been only available before.
Yeah, exactly right. And if you have a look on this slide here, you can actually see, some of the benefits around using ETFs. So the idea, as I mentioned, there were typically the benefit over a traditional managed fund was, with a managed fund, the minimums to invest can be quite high. Sometimes can be as high as 50 to 100,000, can be only available to, say, sophisticated investors. And from a perspective of, or maybe even only available via a financial planner. So what an ETF has really enabled is that democratization of investing. Also, ETFs traditionally are passive investments. And what I mean by passive is they track an underlying benchmark. So as a result, they're tracking an underlying benchmark. So whether that's an equity index, which essentially is a basket of stocks, which has some rules around how that basket is created, and there's transparency there. Or it could be a benchmark, could be, physical gold. It could be a basket of bonds, or it could be a currency, for example. But the idea behind an ETF, and really what we've seen, ETFs have been around for nearly 30 years, since the early 90s. They started off in Canada and then mainly in the US. And here in Australia, we're actually hitting, it's the 20th anniversary this year of the first ETF to be launched, which is by a competitor of ours, State Street. But what you actually find is ETFs are transparent. They're low cost because they're traditionally passive, and they're liquid and diversified. And what you now have is you have over 220 different types of exposures that investors can gain access to via, say, the Superhero platform.
Yeah, Yeah, that's great. And just a question in the chat, which we do often hear people asking, is the difference between an ETF and an index fund. Would you mind just giving us a quick update on that one?
Yeah, sure. So a traditional ETF is passive and a traditional index fund is passive. So in theory, they're identical. The difference between them is the fact that an ETF is listed and a traditional index fund is not listed.
Yeah,
That is the only difference.
Yes, but some people do, I guess, interchange them now in terms of an index fund being an ETF or an ETF being an index fund. Traditional index funds weren't available on the stock exchange, but technically an ETF tracks an index and therefore is an index fund.
Yeah, exactly. So I think this concept of what is indexing, so what is an index fund? And historically, maybe 50 years ago, an index fund was simply, if you have a look and you say the ASX 200 or the S&P 500 or the NASDAQ 100 index or the FTSE, that's essentially a benchmark that people use to reference how their portfolio is performing against. And that benchmark is essentially the market. It represents the market. The S&P 500 is the 500 largest stocks from the US. The S&P ASX 200 is the largest 200 stocks weighted by their size listed on the stock exchange. So what an index was traditionally designed to do was to give investors an ability to reference their existing portfolio against what the market is doing. And what Vanguard actually did in the 70s was they created this idea of, well, why should I reference just the index? Why can't I invest in the index? And therefore the first index fund was launched. And from there on in, over the past 50 to 60 years, we've seen this evolution of indexing. And what you've ended up with is through ETFs that really innovated the idea of what is an index. So if you actually look at it, there's about 3 million different types of indexes around the world right now, doing all sorts of different things. And therefore indexes are no longer just born sort of bored and sort of plain. They're more than that.
Yeah, and we'll go into a few of what those really more focused indexes and ETFs are in a bit.
Exactly. And I guess to move on in terms of the differences of an ETF, and we often get compared to, we've talked a bit about, the differences between an ETF and a managed fund. It's really important to understand that essentially, as I mentioned, an ETF is simply a fund that is traded on exchange, it's listed, but its same structure applies in the sense that it is open-ended. And what I mean by that is an ETF size can vary based on the number of people investing in it. So when people are concerned around liquidity, and we often get that question, how liquid is that ETF because it's only got $10 million of size or $100 million. What you need to be really concerned about is the underlying exposure that ETF is aiming to invest in liquid? The ETF can have $10 million, but the underlying can be so liquid that we could entertain investments of 100, 200, $1 billion even, and that would have no impact or issue on our fund. It's the underlying that's really important. And so all we would do by what it means by open-ended is you essentially have the ability to create more units in the ETF, or conversely, redeem more units of the ETF. And then this takes me on to the final point, which is around listed investment companies, or LICs or LITs. ETFs can sometimes get confused by investors with a LIC or a LIT. It's really important to understand the two key differences here. And one is with a LIC or a listed investment trust, it's closed-ended. And what that means is when they launch and when they issue that fund, they issue it with a certain number of units. They don't increase those units on a daily basis or take away those units. So there's only a finite number. And therefore, generally LITs and LICs trade at a premium or discount to what the underlying exposure is. With an ETF, because it's open-ended, it trades essentially what the underlying is. And that's really why ETFs were created, to give that complete, full transparency to investors to say, well, if I want to invest in gold, I want to ensure that when I'm buying, say we've got the world's first physical gold ETF, GOLD. When I buy gold, I'm buying it knowing that it's tracking the Australian dollar gold price. It's not moving away from that price, and that's really important.
Yeah, so I guess they're the benefit of an ETF is you have that full transparency and understanding that the performance of the ETF really does represent the underlying performance of the assets that you're invested in.
Exactly right. And that's our job as the issuer, is really to make sure that, you know, we make sure we manage the ETF. So the ETF fully replicates and physically replicates the underlying exposure that we're looking to provide. So if it's gold, we have 26 tons worth of gold in our with the vault with JP Morgan in London. If it's our, you know, one of our equity ETFs, we actually hold the physical stock as well. And then this is just really to make a point, as I mentioned earlier, that, you know, that misconception that ETF users are investors who are asleep at the wheel. And, you know, I'm hoping by the end of this, you actually, you know, a lot of investors have started to realize that, especially in the past year and a half, that ETFs are more than that. You can build an entire portfolio using ETFs. You know, you can be active with passive exposures, and that's what ETFs have given investors the ability to do so.
Yeah, it's great. I can see a few people have raised their hand throughout. Guys, if you do have questions, please just use the Q&A function and we'll be able to get to your questions throughout.
I just wanted to make a point on, you know, individual stock investing. One thing from where we sit is within a portfolio, it needs to be diversified. It needs to have a multiple different types of exposures. And some people prefer to invest in individual stocks. Some people just prefer to invest in ETFs. Some people prefer to do both. There is this idea from where we sit in terms of investing in a basket of stocks, and it's really around the single stock risk. And this is just an interesting slide to show you. So this is from our biotech ETF. And yes, biotech stocks are very, very volatile at the best of times. So, you know, take this somewhat with a grain of salt, but this is the extreme level of what some of the single stock returns you can get. And with something like biotech, it's really hard to find the winner or loser. And that's where ETFs come into it. If you wanted to get exposure to an area that you may not have full understanding of or time even to research the individual names and the trends, etc., that's where ETFs really help. Is I want biotechnology, but I don't know what biotech stock I should pick or back. And therefore, ETFs help you in giving you the ability to say, well, I just want the whole basket. And then moving beyond that, if you do want to overweight and have some exposure to individual names, you can. But that risk that you may take by investing everything with one stock is minimized by taking an ETF plus a single stock.
Yeah, it's great. And I guess it's all about information and when it comes to understanding this. And if you don't have the time or you're not quite sure to go and do that research yourself and to be on top of all of the trends at the time that they're happening, which especially in smaller companies can be quite volatile and things can change quite quickly. So ETFs are a great way to spread that risk.
Yeah, and look, I'm part of this industry and I sort of look at stocks day in, day out, and I still myself struggle to find the time or to even make those trades and monitor that as well. That's the hardest part as well. Moving on, I guess, just in terms of the different types of exposures that you now have via ETF. So I talked about traditional market exposures. That's your S&P 500. That's that green one there. That's the market cap. That's essentially what people refer to as beta, and that's essentially just the market. But ETFs, as I said, are more than that. So you have smart beta exposures. So they could be exposures that either tilted towards a certain theme, a certain sector, or even tilted towards a certain outcome, such as yield. You have commodity exposures, and we've talked about gold. You have even currency exposures. So if you want the euro or the US dollar, there are ETFs that give you that. And then you go down this path of looking at trading tools, and their exposures for things like inverse or leveraged exposure. So these are short-term tools that investors can take to take a view on particular markets. And we launched to sort of provide either a leveraged long view on the NASDAQ 100 or a short leverage view on the NASDAQ 100. So betting against the NASDAQ performing well. And finally, what you are seeing a lot more of is active fund managers. So companies like Magellan, Fidelity, Platinum, launching listed vehicles of their traditional managed funds. And just really important to understand that they are simply the same vehicle that they would have in their managed fund in their unlisted world. They're just launching it as a listed vehicle to increase their ability or investors to access it. They're not passive, they're active. So
Yeah.
a little bit different regulations around that.
Yeah, sure. So some of those more traditional closed investment funds just becoming more accessible, but still different to an ETF in terms of what they're trying to achieve there, I guess.
Yep, exactly right.
Yeah.
From where I think, in Australia anyway, we're at that sort of early adopter to early majority stage. There's still a lot more sort of growth in the ETF market that you will see. I sort of used to say, if you walk down the street and you ask 10 people how many would know what an ETF is, I think in Australia now, I'd say maybe 40 to 60% can be able to tell me what an ETF is, whereas 10 years ago, it may have been maybe one or two. So definitely changing. What I think now we can sort of really launch into is the real premise of the presentation today, which is around trends. And what are megatrends? And I think you need to take your mind back and just try to define what a megatrend is. And a megatrend is essentially, it's some form of large scale growth within the market. So that's one way that we can identify what is a megatrend. You identify a megatrend also by the fact that it's in an area of high innovation and high disruption. And what we've actually done is, we've tried to identify 4 key megatrends at a very high level that are really shaping our world. And something to consider is thematic investing, is all about investing in megatrends. But to identify a megatrend and to identify really, sort of separate a megatrend from a fad or something that's, a megatrend needs to be long-term. Consider these 2 points. It has to have government support and it has to have intertwining with demographics. So what I mean by that is something like battery technology has really gained traction in the past 2 to 3 years because of government support. You have governments coming in looking to ban the production or sale of petrol vehicles by 2025 or 2030. You have governments coming in and really spending on infrastructure in battery technology and the charging infrastructure. Joe Biden has come through and mentioned that in his infrastructure plan earlier this year. So that government support supports a long-term megatrend. And within this area, we've got things like transformative technology, and a lot of us are locked down. We're stuck at home. And the fact that we can run this presentation via Zoom is an example of that transformative technology. Society and lifestyle is another really burgeoning megatrend. It's something around, the emerging demographics. So the emerging middle class in emerging markets. So this idea that, you're going to have this new massive market of new investors that have money to spend, this consumption story in countries like India and China. Or when we think about health and healthcare, and a lot of talk around COVID and a lot of talk around COVID vaccines, but it's really important to understand that when you've got an aging population in developed markets, you've got a young population in emerging markets, the idea of health and healthcare was a megatrend before COVID-19. It's become, I guess, a bit more magnified now. And so there are things to consider. Is it the technology side? Is it the drug side on biotech? What is it that's really going to drive health and healthcare? And then obviously environment and resources. I think everyone's sort of focusing on, 2050 and sort of getting sort of net zero emissions. And there's a lot of targets. Really interesting to see though in an environment and resource is corporate support in this space.
Yeah, absolutely.
So I guess when you talk about megatrends, and I mentioned it already, but to invest in a megatrend, you can do so via thematics. And thematic investing really is this idea of providing exposure to those megatrends that are shaping the world. But to a lot of investors, it's really hard to pick the right theme. So again, trying to break this down for everyone is, how do you pick the right theme? So firstly, I talked about some of those megatrends. I talked about transformative technology. I talked about health and healthcare. I talked about environment and resources. You can pick the right theme by ensuring that that thematic exposure that you're looking at is somewhat linked to at least one megatrend. That means it's going to have government support. It's going to be intertwined with demographic changes. It's going to be long-term, which is the really important part, is that middle one. It's having some long-term view. But also when you're picking the right theme, what we often find is you want it to be aligned with your views and values. So, if you're at home and you're using Amazon, you're on Facebook, you're got Google Chrome downloaded, you're using Apple as your iPhone, as your phone, whatever it may be, that may be sort of thinking, okay, well, should I be looking at sort of this sort of technology? Should I be looking at these companies? Because I'm not the only one that is using it.
That's a really great point on that one, Kanish. I think especially when people are looking to invest for the first time, there can often be this fear around, oh, you know, I don't understand the ins and outs of finance, or you know, I don't understand all of the acronyms. But I guess a great first step, and again, you do have to do a level of research into the company, but I guess a great first step is look around you. Understand what are the brands that you and all of your friends are talking about that you're using, you know, things like Netflix, like you said, things like Zoom, Facebook, Amazon. You can see that because these companies have customer love and are used all over the world, not just here in Australia, but are used all over the world, and the incredible growth that they've seen in customer adoption, that does then lead through to, you know, an impact on the company's revenue and therefore other things as well. And so you can see that not only, I guess, from a one company standpoint, but also from a mega trend and from a thematic point of view. You can really see in the world around you these seismic shifts that are being made, things like climate change and how passionate, particularly the younger demographic is about these issues. You can really see it starting to take shape in the world, and therefore influencing the market as well.
And Rachel, just, you know, you're saying, you know, people need to consider aligning their views and values with one investment, and you know, but as you mentioned at the start of that, it's their entire portfolio. You know, that's what we generally see, and you know, you're starting to see people actually, you know, vote with their feet when they're looking at certain investments and saying, you know what, no, I don't really believe in that company, or I don't really believe in that theme, and therefore, yes, it may be doing well, or, you know, there may be another reason why, but I may not want to have that. And that's something that when you're thinking around thematics, it's really ensuring that's an easy way to pick a theme, or pick some themes, or pick a theme to build a portfolio around, is consider what are your views and values. But it's not even, it's your values, it's your views on where you see the world going. So if you see the world moving in the space of an emerging market, emerging middle classes consumption story, well, then look at potentially emerging market exposure. Look at India as a country exposure, for example. You know, talking about it being long-term, if it has that government support, if it's intertwined with demographic changes, well, then yes, the theme will be long-term. We're very lucky in Australia, you know, not just from ETF series, we've got a lot of thematic ETFs, and we're launching some more in due course this year. But even from our peers in the market, all the thematic exposure that investors have access to are long-term in nature. There's no fad ETFs, as I call them. And in the US, the ETF market's a lot bigger, it's a lot more developed. We do see some of those fad style ETFs. And examples are a working from home ETF or a COVID ETF. Now, given the fact that we're working from home, people may think, well, hold on, that's probably a long-term theme. And my personal opinion, it's a theme, but it's more short to medium term. Really strong companies and interesting portfolio. You know, the working from home ETF has companies like Microsoft. You know, that's what I use with my team to speak to and communicate with. So that's an example there. But as a theme, I don't think it's a 10, 20-year theme. So when I'm talking long term, that is the lens that I'm looking at. I'm talking, you know, 10 years plus, multi-decade themes. It's not something that's going to be around in 2-3 years time. It's going to be something that's really disrupting and innovating our world for decades to come. And just on the final 2 points there is, when you're talking about thematic ETFs, you generally find that thematic ETFs are either agnostic to sector or they're agnostic to countries. Because if you're locked into both, if you're locked into, say, just the tech sector of Australia, well, you've got a really small market to consider. And so when you're looking at themes, it can be a sector, but it should be then global, or it can be a country. And I'd probably say you're less likely to find thematics that just focus on a country, because what you actually find is, and even when we're looking to develop more thematic ETFs, is you want to have at least country agnostic. You can have a sector specific, but at least country agnostic, because it's much more than just a single country with any thematic of what we've looked at anyway.
Yeah, sure. So, sorry, there are some ETFs that do focus on a specific country or a specific sector, or both. Like, I think when we were on talking to Van Eck, you know, they've got an ETF that's Australian bank focused. And so that's a very specific ETF. But when we're talking about thematics and these big long-term, you know, demographic themes and trends that are happening, it's often that they have that broader cross-country globalized view.
Exactly right. And a final point on thematic ETFs is the portfolio should be true to label. So what you may find is just because an ETF has robots in its name, is that the best way to access the robotics, automation, and artificial intelligence theme? So this is all about lifting up the hood of an ETF, as sort of the stereotypical saying goes, but really just doing a bit of research, because an ETF tracks an index, and there are no indexes currently in Australia that are exactly identical. They're all made in different ways, and they've all got different rules behind them. And I'll talk to you about our ROBO ETF, but just to highlight that point, it needs to be true to label. The best way when you're thinking about thematic ETFs is if you were to look at the portfolio, could you identify the theme that it's supposed to track without knowing the theme? And it's really interesting because some ETFs, you look at it and you go, okay, I can clearly think that that's a broad, say a shopping or an e-commerce ETF. And what you want to ensure is, yes, it is. Sometimes when you look at an ETF and it doesn't represent that theme, well, then that just means that maybe the theme is not what you understood it to be, and you need to do a bit of research, and you actually find, there are companies that you had no idea were actually associated with a particular theme. So that portfolio being true to label is really important.
Yeah, and I guess the best place for you to really look is on the website of the provider. So I know, for example, on Superhero, you can search a number of different ETFs and themes, but if you want, and I think we provide a brief description of the ETF, obviously all of your pricing info, and then the top holdings of the ETF, which, like you said, is always important to look at. But if you do want a bit more detail as to, the whole list of holdings, multi-year performance, I guess the ETF provider's website is the best place to go. There's a fact sheet for every single ETF out there. And I've found it really simple information as well, as someone that, isn't the most sophisticated investor ever, but has a bit of experience. I find those are really simple, clean, easy to use way of finding out information. It's not overwhelming, but it's really comprehensive. So, for ETF Securities, going to their website, they've got a list of all of their ETFs, and you can actually go in and find out more about each one.
Yeah, and some people may not realize you can actually download the full holdings of our equity ETFs, and you can do that pretty much on most other ETF providers. So you can actually see what exposure you have. There's no secret sauce with passive ETFs. We give people full transparency on the index, full transparency on the rules behind that index that we track, but also full transparency on the holdings. So people can actually see, okay, I've got, 4% exposure to X stock, and that's something that, ETFs are really well known for. And I guess the final point is just around diversification. So this is sort of coming into the conversation around, well, how do I use thematic ETFs? The whole concept is diversification is really key. And I'd use the analogy of making a good meal, whether it's a cake, a stir fry, pasta, whatever it is that you're making. You don't make it with one ingredient, you make it with multiple ingredients. And that's the same thing within a portfolio. To be really strong, really robust, and have a long-term, hopefully positive performance, well, it needs to be diversified. So you don't have that risk of just one stock or one ETF or one country or one sector. It's diversified across the entire range. And, ETFs give you that diversified view of a theme, but it's more about don't just invest in one theme, invest in, build an ETF or build a portfolio around different investments. I think there was a poll, Rachel, it'd be interesting to see in terms of, the overlap that some of these themes that we've talked about as well. I'm not sure if we've got that here, but something that we have really highlighted was the fact that some of those thematic ETFs that we have actually don't have much overlap to traditional markets. It's this misconception that people think, well, I'm buying the NASDAQ 100 index, and that's a technology play. But yet we have an ETF that just looks at the technology sector. And by the way, that's global in terms of its view, but its overlap to the most well-known, in theory, tech index is only 16.5%. So what you may find is what you thought is technology could be very different. And this is sort of something that I was harking back to, which is, lifting the hood of these ETFs and really understanding what am I getting exposure to. And so even going down that path, looking at, say, a thematic of ROBO, which is the robotics, automation, and artificial intelligence, what you actually find is that overlap to, say, the NASDAQ 100 is only 6.2%, or the S&P 500, which is the US market benchmark, that's 3.5%, or the MSCI All Country World Index, which essentially is thousands and thousands of stocks representing the entire globe. The overlap of ROBO to the entire global index is only 3.2%. So really important to understand that these companies, these themes, thematic ETFs, they're investing in companies that are already listed. So these companies would be in that MSCI All Country World Index, but it's highlighting what those companies are. And the fact that that overlap is so small, you actually find that you can potentially use traditional market exposures such as the NASDAQ 100 alongside some of these thematic ETFs. So it's not a case of one or the other, it's complementary to each other. And it was interesting to see, obviously, the ROBO ETF having zero overlap to the ASX 200. So clearly very hard to find Australian names that are in that thematic of robotics, automation, and artificial intelligence.
Yeah, and it's great that ETFs are a way that even if the ASX 200 doesn't have those main companies that are in robotics and automation, that you can still get exposure through buying something on the ASX to those themes and those companies.
And I guess in terms of thinking about how you invest in thematics, so this is, building portfolio. So how would you do it? And the three ways in which we've tried to interpret this is you can use ETFs at the core of your portfolio. So essentially they're your building blocks. What we're actually finding is a lot of investors that are now coming to the market, a lot of younger investors are doing this because they're aligning their portfolios to their views and values. And they're saying, well, I don't need to just buy the big four banks. I don't need to buy the Telstras of the world. I can now look beyond the Australian market and I can actually build a portfolio using international equities. I can build a portfolio using commodities or whatever it may be. And ETFs have given that vehicle for them to do so. So building an ETF using thematics as the core. The more traditional way is what we see with a lot of investors across the board, and still the majority of how investors look at thematics is using thematics as a satellite. So they sit there and think, okay, it replaces some form of their global equity exposures, and they tilt their portfolios to certain themes. So, they may have a portfolio of broad market ETFs or active managers or even direct stocks, and they want to tilt and take a view on, say, robotics and automation or battery technology, and they do that via ETF. So it's complementing, and that's what they call the satellite. It's complementary to their existing core allocation. And finally, you have the tilt. And this is really for people that sit there and are taking more of a short to medium term view. Because if you're using thematics as a core or as a satellite, well, you're taking a much more longer term view, 3 years plus. Looking at thematics as a tilt, the idea is that in this short to medium term, 6, 18 months, I really believe that this particular theme is going to outperform. It's going to provide this performance kicker. I'm investing in this outside of my traditional portfolio. I'm betting on hoping that this ETF or this theme will do very well in. What we generally find with tilt, it's the trading tools. It's those ETFs that are designed to be used in that concept. It's to provide that additional alpha or traditional performance to the portfolio. And these are some of the examples that, from an ETF securities perspective that we have in our range of what we look at as being core investments. So in the equity range, it's things like our FANG ETF or our gold ETF for alternatives. In looking at satellites, it's things like, well, yield or income is a satellite exposure. You're targeting a particular outcome such as income, and there's a ZYUS is a US equity income product, or it's the thematics like ROBO and ACDC and tech. And then I talked about those trading tools, and they're sort of the tools that are short to medium term. They need to be used by sophisticated investors, and these are the long NASDAQ 100 hedge fund or the short NASDAQ 100 hedge fund. So you're essentially taking a view on where the NASDAQ 100 will go. So we'll take you a bit more detail in terms of 3 ETFs, and they are FANG, ROBO, and ACDC. And I talked about FANG as being a core thematic. The reason why I really believe it's a core thematic is, for me, and this is the idea that you can actually use this as a building block within a portfolio, is it's representative of a multi-thematic. So it not only represents one theme, and the reason being is that the FANG Plus ETF, or the code is FANG, it's a concentrated exposure on big tech. Now, FANG is an acronym. Again, as I mentioned at the start, we love our acronyms, and FANG essentially refers to the companies of Facebook, Apple, Netflix, Google, and Amazon, sorry. And what you actually find is it's more than just those. So it's the FANG Plus. So it's companies like Twitter, like Tesla, Alibaba, Baidu, Nvidia. These are companies that are really focused on this growth, this innovation, this technology. What's interesting to note is, yes, it's 10 stocks, but these 10 stocks aren't technology names. I call it big tech, but the only two names in this ETF that can classify as technology stocks are Nvidia and Apple. Tesla is a consumer company in terms of it's an automobile company. Amazon's a consumer discretionary company. Netflix is classified as media and communications. So is Facebook. The majority of their revenues are from ads, as is Google or Alphabet. So it's investing in more than just technology. You're investing in talking about those themes. And, you know, what are the mega trends? Well, this is really why I call it a multi-thematic, because it's more than just one individual theme. It's e-commerce, it's cloud computing through Google, Amazon. You know, AWS is or will be one of the largest cloud providers. It's companies like in the e-entertainment space. You know, you've got from Amazon Prime to Netflix to even Twitter. And then you talk about next generation cars as well. So it's more than just one theme. So it's really interesting. And this is why we sort of think FANG can be seen as a core building block within portfolios.
Yeah, it's all companies that obviously are using the changes in technology to change the world, but all in different areas of our lives.
Yeah, exactly right. And, you know, I think we associate, you know, FANG with being tech, and sometimes that's not always the case, but, and that's the key point there within here. It's more than just, you know, these companies, some of them are listed in the US, some of these are Chinese companies. So from a region perspective, it's very much concentrated on the US, but it's really important. And I think we're all aware of, these are global companies. You know, when COVID-19 was really targeting and hurting airline companies, Amazon was buying aircraft from Boeing to help with facilitating delivery of their goods. You know, these are companies that prospered through 2020, but also were prospering before that as well. So really strong, innovative market leaders in their spaces. And so just on the index, so I talked about, you know, lifting the hood up of ETFs and really understanding what the indexes are. This index essentially is from the New York Stock Exchange. They're an index manager as well as being an exchange provider. So what this index does is it looks at all companies first and foremost in this space of listings that within on a major US exchange. It has certain, you know, rules around it. You know, each stock within the portfolio has to have a minimum size of $5 billion. They have to be trading at least $50 million a day. So you were only looking at very large companies within this space. There's a minimum of 10 companies that can make up the index, and the index rebalances every quarter. And it's also equally weighted. So we're not taking a view, because if we did it by size, then Apple would have the largest weight in the portfolio. But we're taking a view on the theme of FANGs and FANG Plus. We're taking a view on innovation. We're not taking a view on the biggest company being the winner. We're taking a view on we should equal weight the entire portfolio across all 10. And that's actually what's benefited this portfolio, because Tesla isn't the biggest company, but in 2020 was one of the strongest performers and helped this fund really, you know, outperform some of these broad indexes, which we're just showing you here. You know, over 1 year to the end of May, returned 50.2%. You know, let's look at the other markets, let's say the NASDAQ, even through a really strong rally in terms of 2020, it pretty much has doubled that of the NASDAQ 100 index. And you're looking back over even 5 years, so it's not just a 1 year number, over 5 years, annualized returns of nearly 39% as well. The last sort of the final two products I was just going to mention was the satellite thematic. So this is where we generally see clients and investors use these themes to complement a core portfolio. You know, whether that's FANG, whether that's the S&P 500, whether that's a direct portfolio of stocks. And these two themes are ROBO and ACDC, so robotics and automation, and then the thematic of battery technology and lithium. So within robotics and automation, the ROBO ETF was a leader in this space. It really provides investors an ability to access this mega trend of automation, artificial intelligence, and robotics. From a perspective of why this ETF, and again, talking about being true to label, it's really interesting with ROBO is the index that we track is run by a company out of the US called ROBO Global. And these guys are essentially, they launched themselves in 2013. It's the team in the green there, the people in the green. These are traditional stock pickers. So normally you would say, well, why do they launch a passive index? Why don't they, do an active where they're picking and choosing and they're doing all these sorts of funky things? Well, they thought the best way to access this theme is to do it via an index. And you couldn't just find stocks that said, I'm participating in the theme of robotics and automation. It was very hard to identify. So what they did around Will Studebaker, who's the chief investment officer and also one of the founders, and Jeremy Capron, who's a director of research, those two really built a research function on the theme of robotics, automation, and artificial intelligence. But they didn't just do it alone. They partnered up with the team in purple. They call these the dream team of this mega trend of robotics and automation and AI. So it's people like Raffaele D'Andrea on the top right. Now, he founded Kiva Systems. For those that don't know, Kiva Systems is now called Amazon Robotics. It was bought by Amazon about 5 years ago from RAF. It's Daniela Rus in the bottom left. She's the head of the Robotics Center at MIT. Or Henry Christensen, he's the director of the Robotics Center at UC San Diego. So these are people, entrepreneurs, academics, people that are in the industry, and they advise the research team at Robo Global to say, these are the areas of robotics and automation and artificial intelligence you should look at. These are the companies you should potentially consider. We can open up doors for you. And so then they've developed this idea of what are the subsectors of this theme. So we normally look at it and say, well, how can food and agriculture be classified as part of this megatrend? And John Deere in that space as well. John Deere, majority of their tractors use some form of autonomous technology. They use some form of sensing software and hardware when they're going over farms. Consumer products, things like iRobot, or even healthcare in terms of intuitive surgical. And if you get a chance after this webinar, jump on YouTube, type in intuitive surgical, type in GRAPE, type in Da Vinci machine. You'll actually see the Da Vinci machine. It's a $2 million mid-body robotic surgery robot, and it peels apart a grape and stitches it back up together. So that's the whole idea behind Robo. So it's this really strong blend of active, fundamental, bottom-up research, the research behind it, and passive rules to give you an ETF that's low cost, but gives you exposure to a theme and being true to label. And again, performance, and we'll have this presentation. If anyone wants to, they can jump on our website to have a look. But finally, the last one is ACDC, or battery technology. And it's a lot of media mentions around battery technology, and it's really important to understand. We talked about government support. That's what's really been behind the big growth that we've seen in battery technology. It's been policymakers. 13 countries, 31 regions, cities have already announced plans to phase out petrol and diesel engines. You're seeing corporate support. That's really important. Automakers like Volkswagen, even Lamborghini for, recently Porsche, Volvo. These are car manufacturers that are increasingly saying and putting targets and deadlines around when they're going to phase out sales of petrol vehicles. And another part there that really sort of comes in from a domestic front is lithium. Lithium is seen as a white gold, and it's really gone through a strong surge, and Australian miners have been at the forefront of lithium supply for battery technology. So that's why we launched ACDC, and we launched it with this idea. And just to give you guys full context, when we're launching thematic ETFs, we launch it with the idea these are long-term views. And we launched this fund 3 years ago. And 3 years ago, no one was talking about battery technology, not in the way they are now. So we took a long-term view, and this is a multi-decade view in terms of a mega trend. And ACDC gives investors the ability to invest in the whole battery value chain. So we talk about the lithium miners, there's exposure to actual lithium miners within the portfolio. You talk about the battery technology, so the actual producers of battery technology. And then you talk about the providers of those solutions. So companies like Tesla, for example, or even companies like Daimler or Nissan. And then finally, you talk about, well, what happens after you sell the products? And it's companies like SolarEdge. SolarEdge is a US company, has about a 60% market share on the retail solar panel market in the US. But they're working really hard on battery technology and battery electric vehicle charging infrastructure. So you've got this full range. And just to sort of finish up on ACDC, a lot of people talk about Tesla. As you can see here, this is a portfolio. It's equally weighted, by the way. So again, we don't take a view that Tesla is going to be the biggest, provider of the performance in this one. That's not the case. It's companies like SolarEdge that have really contributed really heavily to performance. It's companies like Samsung SDI and LG Chem. LG Chem actually produce the batteries for companies like Volkswagen. And it's not only lithium, it's also flow-based batteries or, a whole range of others that it's looking beyond just lithium. It's more than that. So it's, this whole space, it's growing and it's getting a lot of attention. And, most recently, we've seen really strong performance in that space. And as you can see here, sort of the 1 year figures, and apologies for that, that's my dog in the background. But as you can see here, it's sort of really strong returns. It was the best performing ETF in 2020 across the entire Australian ETF market as well. With valuation, the ACDC often gets this idea, well, is it overvalued? Really important to understand, it is a long-term growth play. We talk about megatrends being long-term growth plays. There are companies, and generally in most growth-orientated themes, you will find it to be seen expensive relative to the rest of the market, which have maybe the big banks or things like that. You need to understand that in growth-orientated areas, these are companies that are reinvesting their profits. They're looking for constant reinvestment. They're understanding that this is an area of high innovation. So put that lens on when you're thinking about, well, is this theme actually expensive? If that was to be the case, you would never have bought Amazon, for the past 20 years. And to be honest, most people would have been seen a fool if they didn't buy that as well. That sort of finishes up the ACDC, the ROBO, the FANG. They fit part of our future present range. We're going to be growing this range in time as well. So definitely look out via our website for more information.
Awesome. And I've just done a little poll there just to gauge some interest on which of these ETFs everyone is really interested in. I think, where are we up for time? We've got 5 minutes for a couple of questions. So we've got quite a few questions coming through in the Q&A. Quick one in regards to weighting, Kanish. I know you went through this on a couple of slides, but could you explain a little bit more just what weighting in an ETF means and how you do it, whether it's a different strategy in different ETFs or whether you take kind of the same strategy when it comes to weighting across all of your ETFs?
Yeah, so it's unfortunately, it's not as simple as it's the same for all. It's different for each ETF. So our FANG ETF, our ACDC ETF, our tech ETF, and our Cure ETF, our biotech ETF, they're all equal weight. So essentially, an index has a set of rules around them that go into constructing that portfolio. But those rules have to be applied at certain dates. And with, say, FANG, it's applied every quarter. With ROBO, it's every quarter. With ACDC, it's on a semi-annual basis. So again, the indexes are all unique in that way. They all have different times in which those rules are applied, and that's when the portfolio changes. So what you actually find is the weightings of an index will vary. We have an income ETF, the ZYUS ETF that I mentioned, that's weighted by dividend yield. So the largest weight in that ETF is stocks that have the highest yield historically. So very different. It's really important to, again, talk to the ETF provider, read through the product disclosure statement, read through just the information on the website. There's a lot of useful, just basic information. You'll find out more.
Yeah, absolutely. You mentioned there the dividend or income ETF. It'd be good to understand, and there's a question here a little bit more around dividends when it comes to not only that ETF, but all ETFs.
Yeah.
So how dividends actually work in ETFs, and specifically what an ETF that might be focused towards dividend income, what the purpose and methodology is there.
Yeah, sure. So just quickly on dividends. So when we have an equity ETF, so any of these, for example, or any equity ETF, and we physically replicate, which means we actually hold the underlying stock. If those stocks pay a dividend, we pass that directly to the end investor. So that normally happens on certain distribution dates. So again, to make it a little bit more confusing for everyone, each ETF has different distribution frequencies. So for example, our ROBO ETF only distributes on the 30th of June. But our ZY-US ETF, which is that US equity income product, that distributes every quarter. So if the underlying stocks pay a dividend, the fund holds on to that distribution date, and it distributes that out across all the unit holders. But you have to be invested on that date at the end of that distribution period. If you sell out beforehand, you don't receive that distribution. The other thing is for Australian equities, if you hold an Australian equity ETF, or there are some Australian names within a portfolio, such as with ACDC, any franking credits also get passed through directly to the unit holders on that distribution date. And finally, just on distributions, capital gains, that if a fund has attained some capital gains throughout the year, they get paid out on the 30th of June. So again, each ETF will have different distribution frequencies for straight dividends. Look up those on the website, speak to the providers. Investors can also just be aware, our ROBO ETF, I think, has a distribution of nearly $5 for today, for the 30th of June. And the reason being is of the capital gains that it's built up over the year.
Yeah, great. Now we've got a few more questions. To anyone that we don't get to your question today, we'll get a list of those and we'll be able to send out some answers via email. So don't worry, we will get back to you. A few more questions on just where this will be available afterwards, because I know that's really important. Kanish, is this presentation, the actual slides, available on your website at all, or otherwise we can work out a way to get it sent through?
They are not, but I'm sure maybe we can send them out later on.
Yeah. But regardless, to everyone, this will be available on our YouTube channel, so on the Superhero AU YouTube channel, and we'll also send out the recording to anyone that's registered. So that includes all of you attending today, to make sure that you get the recording as well. I think we are nearly out of time. So I'll let you go, Kanish. Thank you so much for coming and speaking to us today about thematic investing specifically, and some of these big mega trends that we're starting to see come through. The results of the poll that we just ran, interestingly, ACDC came out at the top at 39%, followed by FANG at 30%, ROBO at 15%, and then Tech and Cure coming in. We didn't go into those ones specifically as much, that might be why there, but yeah, I think people are definitely interested in some of these thematic ETFs. I hope everyone got a lot out of today. Please feel free, if you have any other questions as well, to send through an email to me, rachel@superhero.com.au as well, and we'll get those answered between us for you. Have a great rest of your day, everyone, and we'll have the recording available for you shortly. Thank you.